Before I talk about the next question, let me just explain a little bit about what a salary is versus a dividend. A salary is paid by a corporation, and it is a deduction from income. So say the professional corporation earns $300,000 of professional income and pays a salary of $100,000 to the health professional. So the corporation at the end of the day gets a deduction for that $100,000 of salary that is paid to the individual. So the net income of the professional corporation is that $300,000 of professional income less the salary. So a salary is a deductible expense by a professional corporation. A dividend, on the other hand, is not a deductible expense from a corporation because it's paid with after corporate tax dollars. So coming back to our example where the professional corporation earns $300,000, it pays tax at 15%. So it would owe tax of $45,000, and it would have $255,000 after corporate tax income to distribute as a dividend to the shareholders. And for those reasons, because salary is a deductible expense to a corporation, the corporation doesn't pay any tax on the amount of income that it pays out as a salary, then the individual is subject to a higher tax rate on salary than he or she is on dividends. And the reason for that is that dividends are paid with after corporate tax dollars. So the corporation's already paid one level of tax. The individual is going to pay a second level of tax, but albeit it is going to be a lower tax rate on dividends than it would be on salary. That being said, the tax paid on a salary is virtually identical when you compare it to the combined corporate and personal taxes when a dividend is paid. There are advantages to paying out a salary, though. For one, it creates RSP contribution room. RSP contribution room is based on 18% of an individual's prior year's earned income. Self-employment income and salary are considered to be earned income, whereas dividends are not. So if contributing to an RSP is a priority of the health professional, they will have to take a salary. Taking dividends only from their professional corporation will not allow them to contribute to their RSP. The second advantage of paying a salary is that it may allow for the potential to deduct childcare expenses. Childcare expenses are only deductible to the extent that an individual has salary or self-employment income. If an individual subscribes to a dividend-only remuneration strategy and has either a nanny at home or is paying daycare expenses, these expenses won't be deductible in the individual's tax return because they're not earning self-employment income or salary. And finally, by paying a salary, it creates the opportunity to fund an individual pension plan. An individual pension plan is a corporate-funded pension plan that can provide for a pension retirement income for the health professional. But again, this type of structure is only available if the individual takes a salary. If the individual takes only dividends, they cannot set up and fund an individual pension plan. There are advantages to paying out a dividend as well. For example, dividends are not taxed at source. If an individual wants to receive $10,000 from his or her professional corporation, they can receive $10,000 by way of a dividend. Because that fund is not, that transfer is not subject to source deductions, $10,000 can be transferred from the corporate bank account to the individual's bank account. Whereas if a salary is paid, and we're talking about the same amount here, $10,000 is paid as a salary to the individual, that salary is going to be subject to source deductions. That means that the corporation has to withhold CPP and income taxes from that $10,000 salary and remit that amount to the CRA on a monthly basis. Another advantage to paying out a dividend is that it's not subject to CPP. Right now, CPP is a cost to the corporation of about $2,500 annually. That cost will increase when the new enhanced CPP kicks in a couple of years. But in order to avoid this additional cost, you could take a dividend-only remuneration strategy. However, you have to keep in mind that you will be losing out on the other advantages associated with paying out a salary.